New Redfin data is out on the U.S. housing market, and it might leave you scratching your head a bit as to what's happening with the nationwide median home price. As of September, Redfin has the seasonally adjusted median home price in the U.S. at $411,000, the second consecutive monthly increase, and back to where it was in the previous peak in May. In today's video, we're going to do a quick update on the latest data and why the national price is not heading lower, even as mortgage rates are surging and sales are plummeting. Let's get into it. If you think the housing market is on track to crash harder than the last housing bubble, regardless of what the latest data shows, go ahead and hit that subscribe button down below. Today, we're looking at national level housing data, but one thing that is important to remember here is the old saying, all real estate is local. The national price is, after all, made up of all the individual markets throughout the country, and they can each act in very different ways from each other. Let's take a look at the two extreme ends of home price performance to show you what I mean. Here are the top 5 large markets with the largest price declines since their peak back in April. Oakland, California, Ogden, Utah, Austin, Texas, Anaheim, California, and Oxnard, California. Each of them are down 7 or 8% from their recent peak in April. Oakland was down more in August, but as you can see here, its median price ticked up a bit in September. From this graph, you would think the housing market in the nation overall should be in pretty rough shape, and not at all-time record high levels. And then looking at the opposite end of the spectrum, you would get a much different impression. Here are the top 5 large markets with the largest price increases since April. You've got Akron, Ohio, Jacksonville, North Carolina, Greenville, South Carolina, Greensboro, North Carolina, and Albany, New York. These markets are up around 7 or 8% since April, and Akron is up more than 11%. From this chart, you would think there was nothing wrong with the housing market right now. This is why it's so important to look at these regional markets and also highlight how we can have such divergent performances. I'm going to do some regional analysis videos in October and November focusing on these markets in particular so we can get some better insights into what's going on. For the Oakland area, I actually just did a video on that recently, so make sure to check it out if you haven't already. I'll leave a link to it in the description down below. I've also done a video on the Austin, Texas market, but it's a bit dated at this point, so I'll provide an update on that one soon. Another factor to consider for our analysis today is what has happened with mortgage rates recently. We need to remember that the median price we're seeing in September is generally for homes that went under contract in August. The average mortgage rate in August had dipped down to 5.2% from 5.5% in June. So the uptick in median home price in September was likely due in part to the mortgage rate that was trending lower at the time homes were going under contract. Okay, right now let's look at the underlying supply and demand data for the U.S. overall to see if the recent strength in the median price is likely to last from a macro perspective. On the supply side, total inventory of homes on the market took a pause after rising for 8 consecutive months. Despite the recent uptrend, supply is still near historic lows and continues to put upward pressure on prices, despite so many homes being out of reach for the average buyer. New listings continue their downward trend, signaling that inventory levels aren't likely to get a boost from a lot of new homes coming on the market. On the demand side, we have transaction volumes that are heading lower as well, which is due to homes being unaffordable as well as the tight supply. However, the pace of sales is low enough right now that we are seeing the month's supply of homes still managing to head higher despite the declining number of new homes coming on the market each month. One of the most important metrics that I've been watching on the demand side is the sales to list price ratio, which was at an even 100% in September, meaning that homes are selling at list price on average, and the bidding wars that were a hallmark of the last 2 years have come to an end. There is still room for this metric to fall as it returns to the pre-pandemic average of about 98%. Another critical demand metric I'm watching is the percent of homes that saw a drop in price. As of September, it was at 14.9%, the highest level since September of 2019, and confirms the weakness in demand that we are seeing in the sale to list price ratio. To sum it up, here's the main takeaways from the new U.S. housing data from Redfin. The national median home price is outperforming expectations, but it is somewhat misleading as it does not reflect all the varied levels of performance in regional markets. The underlying supply and demand data still show a tight supply, although inventory levels are generally trending higher. Demand appears to continue to weaken as homes are no longer selling above list price on average, and the percent of homes with price drops continues to rise. Add it all up, and I still see a national housing market that has turned and is in the beginning stages of the median home price heading lower. If you're new to this channel, make sure to check out my latest video covering how much lower prices could go heading into 2023. I release those market crash updates about once per month, and I'll be releasing more of the regional analysis videos in the weeks to come. If you want to see all those videos when they come out, make sure that you're subscribed and hit that notification bell down below so you know right away when those videos come out. And if you found this video helpful or a little entertaining, please leave the video a thumbs up and share it with others to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.